Hi there, and welcome to this multi-part video series where I am going to explain you how you can create your own trading bot strategy with the help of Jupyter notebooks, Python, Pandas and the Pandas TA library, and finally of course the Fractrate trading bot. I will show you how you can use Jupyter notebooks to create a data frame containing the Ichimoku indicator, make plots of this data, program Ichimoku indicator based strategies, and finally turn them into a strategy that you can use with your Fractrate based trading bot. So again, the whole purpose is that you learn how to use these tools like TA libraries, Python, Pandas, Jupyter and Fractrate to create your own strategies. The additional benefit and follow-up on these videos is that I'm going to backtest these Ichimoku based strategies in my other backtesting and strategy testing series. We can then also find out if Ichimoku based strategies have the potential to create profits with the help of a trading bot. But before I continue, here are some major assumptions that I will use in these videos. First, that you have some basic knowledge on how you use Jupyter notebooks and Python programming. This is not a learning video on those subjects, so if you have any questions about these, then look the answers up yourself. Google is your friend here. Second, you have Fractrate installed or at least have a dataset ready to be analyzed. And finally, that you at least have seen some of my other videos about Fractrate and strategy development. And if not, go watch these videos first and then return to proceed on this one. Now, enough intro talk, let's go ahead and continue with the Ichimoku indicator we are going to use to create a strategy for the trading bot. Because if you don't have some fundamental knowledge about the indicator you are going to use, you will never know how to exactly use and interpret this output for further strategy development. I will keep this only to the basic information about the Ichimoku Kinko Hyo system for the sake of the length of this video. Ichimoku is actually a bunch of indicators together that tries to give you an overview in one glance if a market is bullish or bearish. It was invented by a Japanese reporter, Goichi Hosoda, that had the wish to have an easy visual indicator on market sentiment. It was first published in the late 1960s in Asia and then became more widely spread in the 90s, when it was easier to calculate this indicator with computers. The Ichimoku system consists of 5 different indicators, which are called the Tenkan-sen, the Kijun-sen, the Senku-span A and Senku-span B, and the Chiku-span. Each of these indicators is calculated differently and has a different philosophy behind it. The Tenkan-sen is also known as the conversion line. It is the shortest indicator, which means that this indicator moves closest to daily price action. By default, it is calculated by averaging the highest high and the lowest low of the previous 9 periods. You should not confuse this Tenkan-sen with the 9-day exponential moving average or the 9-day simple moving average. The EMA and SMA always change according to the values of the daily closes. But the Tenkan-sen can get some periods of flatness, when prices will not get above or below the highest high or low of the last 9 days. The Kijun-sen is also called the baseline and is primarily a trend container. It is calculated by averaging the highest high and the lowest low of the previous 26 periods. And you can compare this with the Tenkan-sen, but only with a larger time period and therefore giving more importance to larger trends in the market. Also another thing, the Kijun is also often used as the stop loss for a trade. The Senku-span A is the average of the Tenkan-sen and the Kijun-sen, and it is projected 26 days in the future on the chart. So, today's Senku-span A is the average of the Tenkan-sen and the Kijun-sen of 26 days ago. And by doing this future projection, you have an idea of what the price will do in the future, and that is where the prediction of this chart comes from. The Senku-span A will also form the Kumo cloud together with the Senku-span B. And talking about the Senku-span B, it is calculated by averaging the highest high and the lowest low of the prior 52 periods. This average is then also projected 26 periods in the future. It is essentially the equilibrium for prices over the past 52 periods, plotted 26 days in the futures on the chart. And together with the Senku span A, it forms the Kumo cloud. This cloud can form support or resistance to a price. And the last indicator is the Chiku span, which is a very underrated but very powerful tool in the Ichimoku system. It actually is the close price but then projected 26 days in the past. With the Chiku span you can also determine if the chart is bullish or bearish, or where resistance areas occur or not. Now I will not go too deep into the theory behind the Ichimoku system in this video, or why the time periods I mentioned are chosen, and how to interpret the more advanced concept behind the Ichimoku chart. But if you want to know more about this, then I really recommend you to read up on some good books or websites about this system. Let's now continue. Start up a Jupyter notebook and install Pandas TA, if it's not available on your system yet. If your system does not have Pandas TA or Matplotlib installed yet, you should do that, because you will need it to follow this demonstration. You can install Pandas TA through the terminal on your machine or via your notebook. To execute terminal commands via your Jupyter notebook, put an exclamation mark before the command you want to execute and press Shift Enter or Control Enter to run that cell. You can see here in my case that Pandas TA was already installed, and in your case the output can be something like this. But I think you get the general idea here. Oh, and by the way, I have prepared another notebook and will copy and paste all these commands in the notebook cells here. That will save us some time and prevent typos that I otherwise have to fix all the time. And of course I will leave that notebook in my GitHub repository so that you can use it by yourself as well. I will leave a link to that repository in the description of this video. And let's enter the commands you will see here in another cell. Execute that cell to import these Python modules in memory so that you can use these from now on. And you can see I have imported Pandas as PD, Pandas TA library as PTA, and have used the Dataframe and NumPy as well. After you have installed these modules, it's time to load the data that you want to analyze into a Dataframe. This data should already be downloaded and available for you, and in my case I have downloaded this data with the help of the FracTrade bot. It was originally downloaded for use with backtesting, and it is in a JSON format. And if you have other formats like CSV for example, you should read the documentations from Panda to learn how to load this into a data frame. So in my case I have used the read JSON method, and also I have renamed the columns to date, open, high, low, close and volume. And at the end, because the date is in a millisecond format, I have changed this to a human readable format with the date command. With the .tail I show you the last 5 entries of the data frame, and if you want to see the whole data frame you just load it with df. And finally you can also see the shape of the data frame. In my case it has 1838 rows and 6 columns. Now we are going to find out how to discover the Ichimoku indicators from the Pandas TA library. So to make use of the Ichimoku indicator from Pandas TA, we have to identify it first. You can do this by make use of the dfta indicators function. That will show you all the indicators the library has. And if you look closely, you will find the Ichimoku function in this whole list of indicators. With the help of the help function, we can learn how to use this function and which output it will generate for us. And as you can see, this help output is full of valuable information, like how the indicator is calculated, which arguments to use for creating a data frame, some additional keyword arguments, and the output you can expect from this function. And this output is very interesting because under normal circumstances you use the indicator and it gives you one single data frame output. But here we have to make use of a small trick to get the output we need, because it will give us 2 lists. And I will show you that now. First we can print the output of the complete Ichimoku indicator by using the following command. Take note that the Tenkan, Kijun, Senkus and Chiku are all the default values, and that the input are the high, low and close of the candles. If you look closely, then you will see two output frames, one frame that contains values up until index 1837 and one frame that starts with index 1838 and ends with 1863. So this second dataset contains 26 values, and can you guess what this data frame is? Just look at the column headers for a tip. It is the Kumo cloud that is projected 26 periods in the future. And again, this Kumo cloud consists of Senkuspan A and Senkuspan B. What we can also do is adjust the indicator values so that they do not reflect the default values that were originally determined for this indicator. You only have to replace the non-values for the time frames you want to reflect these indicators on. So below I have removed the non-values and entered the default Ichimoku values instead. And here I changed these indicator values to represent the crypto market time settings better. You should know that the original Ichimoku values represent the normal times the trading market is open. But since crypto trading is a 24/7 365 business, these values below are supposed to reflect these trading times better. And take note again that the Kumo cloud results with 1897 rows, which is 60 more than the 1837. So here the Kumo cloud is projected 60 days into the future. Now, how do we use these two different datasets in our data frame for making buy and sell decisions, you might ask. So again, the help file says that there are two data frames created as output for this indicator. One data frame projected on the current dates and one data frame projected in the future to create the future Kumo cloud. Now, how do you split these data frames so that you can use them in your trading strategy data frame? First of all, here I place the complete Ichimoku export into one variable. And if we print this variable, we see the same two output data frames again. But because this variable now contains two different datasets in the tuple, we can now print each tuple item separately. So here with this print command I will print the first tuple, and with the second command here I will print the second tuple. I can also immediately create a data frame from the tuple entry instead of just print output. And now that we know that we can create a data frame from the tuple, we can also extract one single column from that data frame. And now we are talking business, because we can now create new columns in the original data frame that was created with the candle information. So this way we can import the complete output of the two Ichimoku tuple entries on the original data frame from the candle information. And with the help of the concatenation function, I can merge multiple data frames on rows, which is indicated by axis equals 1, so that I can create a whole new data frame with all the information. And you can see the output over here. And you can clearly see that this data frame has 1897 rows. But if you paid attention to the original candles data frame, you could see that there were only 1837 rows. So you can imagine that the additional 60 rows of the future Senkuspan A and B were added to the data frame. And one little thing to know is that if you recalculate this cell without resetting the original data frame to its initial dataset, every time you run this cell, there will be additional empty rows added. And that is also the result of the concat function. And now we have enough information to plot and visualize the complete dataset. But before I do that, there is a second way to add the Ichimoku data to the original data frame, without having to use concatenate. It is also more close to the way I extract the initial data from the Ichimoku indicator tuple. However, it is a little bit more code, but it will also help you to see better what you do. And if I copy and paste the contents of this cell, you can here see that I have created additional lines of code to create the additional data frame columns with the Ichimoku indicator values, of course. And if you want to make this really nice and flexible, then use variables for the length of each indicator. And to give you an example, I will create a third data frame. And this time I will add some variables that represent the time frame and the length of these indicators, and also use these to find out what the names of these indicators are as f-strings to identify the correct output columns. So this way you only have to change one setting for each indicator and have less chance of an error. And by doing this, we are definitely at the end of the data frame creation part. Let's continue with plotting of the charts. Again, here I will show you how you can install Matplotlib, but I've installed it earlier, so you see here that the requirement is already satisfied. And let me just copy and paste the complete cell of the plotting code, and I will talk you through it. And this is actually the complete code that you can use to create your own visualization. So here I have imported all the libraries which I use to create a data frame and to create visualizations. Over here I have defined the plot style, which you can see later, and also the size of the figure I want to plot. Then again here I will read the JSON file which contains the data, and I have renamed the columns. And finally I turned the date into a readable format. Then here I create the different indicator columns for the Ichimoku cloud. And you can also see that I use the default values for Ichimoku. Then here in this part I first defined the amount of days I want to see in my chart. And then for each column I created a variable which contained the amount of days and the values I want to show on the plot. With this code I create the lines that I want to plot. And you can see here that I use the dates for the x-axis and the price and other variables for the y-axis. I also gave each line a label. And only the price line I gave a width of 4 and a blue color. In this piece of code I have created a fill for the Kumo cloud. If Senku A is bigger than Senku B, then the fill will be green, and otherwise it will be red. Finally I will give the plot a title and plot the x and y axis labels, and at the end I want to show the plot, and you can see the results over here. And with this plot we are at the end of this video. In the next videos I'm going to proceed with the Ichimoku strategies that I read in a couple of books about the Ichimoku Kinko Hyo indicator. Again, this is just a high-level introduction on how to use these different libraries to create data frames or use indicators and plots. This is only a fundamental for my next few videos where I go deeper into coding to create a workable trading bot strategy. If you like this video, then please click on the like button, subscribe to my channel and leave a comment if you have one. And please, if you want to see more of these kinds of videos, then also leave a comment. I would like to know if I'm doing the right stuff. So, thank you again, and I will see you in the next video. Goodbye!